This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleague Nigel, who is joining in, and Sonia should be with us as well in just a bit. Nigel, good morning.
Well, morning, Prashant. Friday, right? That's what we wait for all week. And, Prashant, later this evening, I'm going to be tracking your Twitter ID because I think you'll be updating us on what the Fed Chair says.
Well,
no updates from me.
Nigel moves on to other stuff, right? I mean, Friday evening onwards, he moves on to other stuff.
Friday is just chill.
All right. Well, let's just quickly run you through what you need to know and, what is the setup this morning. It's actually a flip-flop, basically, not very much, really. So, yesterday, the up move got rejected. The Nifty up move got rejected a little above the 20-day moving average. That's the initial sort of first glance. And I think this may create a little bit of nervousness, a little bit of anxiety that the market got to an important level, crossed above it, and then there was a very sharp sell-off from that point on. How is the U.S.? I'll get to levels, etc., and what to do in a bit, or what not to do. U.S. markets also had this is the flip-flop I'm talking about. So U.S. looked, this same morning yesterday, we were talking about U.S., which was higher and sharply down. NASDAQ down about almost 2% or so. The 2-year is back above the U.S. Treasury. 2-year yield is above 5%. The dollar index saw a very large move. I mean, 104 plus in a single day went up about 0.65%. So data is basically the reason for this. We were talking about manufacturing PMI numbers yesterday morning and how they were soft and how the market responded in a dovish way. Well, you had other data. You had the jobless claims number, which was weaker, which was lower than expected, which indicates a tighter labor market. We had consumer durables, but ex-transportation core consumer durables data, which again was strong. It reinforced hawkish risks. There was also a regional Fed survey which showed that the economy generally seems to be resilient, and that's the weak PMI, and then suddenly strong data 1 day later, and the market kind of was in a bit of a tizzy. But I think beyond all of this, the more important thing is what we will hear from Jerome Powell later tonight. The speech is tonight, and the market will see whether he really wants to indicate a shift in policy tone, etc. 1 year ago, around the same time, at the same symposium, he basically said how we don't want to repeat the mistake of 1970s when actually the Fed was increasing rates and then they paused prematurely. They only, of course, found out later, and then they had to do a lot more. That was the basic message 1 year ago. Will he do something similar now? Because we seem to be in a place where the Fed's done a lot. Many are expecting it to pause, but inflation and data, etc., is still strong. So will we see a message? I mean, if there has to be a change in what they plan to communicate to the market, this would be an appropriate venue to do so. Okay, let's just come back to but that's later tonight, right? We'll only find out Monday morning. In the light of all of it, I mean, I think the advice on the indices, the Nifty, Bank Nifty remains the same, which I've said for the last couple of days. Stay away. It's choppy. The market sells off intraday. It sells off from different levels, etc. One can argue and say that perhaps the base has been moving higher, the bottom has been made, but let a better, clearer picture emerge in terms of what the market wants to do near term. The 20-day moving average for the Nifty is 19,509. That's the first resistance level to cross. That's point number one. The next resistance is the 19,616 level, which is the 50% retracement of the fall from the all-time high of 19,992 to 19,253 last week. The 50% is 19,616. And as I said, hopefully we've kind of made peace with the low that we made last week, which is 19,253. If that starts to emerge into focus again, we'll have to watch. But hopefully we'll be able to defend that. And I think because today is Friday, it's a weekly close, it'll be important to have a positive weekly close as well. Adds to confidence, right? So you need a close above 19,310 point something for us to have a positive weekly close. So keep that in mind. We're above it, but I mean, let's see what the close is. The Nifty Bank sort of crossed the 20-day moving average, but it failed to close above it. Similar kind of picture. But the Bank Nifty, after yesterday's move and day before yesterday's move, is the stronger of the two indices because of the last two sessions, at least right now. The 20-day moving average for the Bank Nifty stands at 44,646. And the next level for the Nifty Bank to take out is 44,895. But my basic message, at least on the indices, remains the same. It's easier said than done. So let a better, clearer picture kind of emerge, and that will give you better sort of entry points and more confidence to stay on with your positions, etc. Implied open in any case is indicating a full 100-point impact on the downside. Sonia.
Oh, absolutely. And you begin by saying that it's Friday and you're going to be tracking the Jackson Hole
Well,
Summit.
Nigel says that.
I'm not going to be for sure. Not on a Friday night.
One of us have to do it, right?
It's okay. We can look at it on Monday morning, right? But it's going to be an interesting day because it's going to be a day that starts in the red. Most Asian markets are now tracking huge losses this morning. So we'll just pull up the Asian market plate for you. The implied Nifty opening is also under pressure, down almost about 100 odd points. Look at that, Hong Kong, Taiwan, all down about 150 to 200 odd points. There was a sharp slide even in the US market, so the Dow was down about almost 400 points. But let's see if at the Jackson Hole Summit there is any indication of what the monetary policy could be from the Fed. All eyes will be on that. Generally, it's not a very big market moving event. It's kind of like a 1 hour play, even in the US market. So it's just a signal for our own markets, nothing alarming. In the meantime, the Nifty continues to be in a very, very tight trading range. Every time it gets to the upper end of the trading range at 19,500, it pulls back. When it gets to the lower end of the range of 19,200, there's buying. So we seem to be stuck in that very, very tight range. Having said that, large block deals yesterday, so the flows looked good. Of course, the DI number includes some of the large block deals, but FIs as well continue to buy in the market. 1,500 crores is what we saw. A couple of stocks to watch out for. The biggest loser this week is Reliance. It's down almost 3% this week. It gets into its AGM on Monday, so that will be the next trigger to watch. Any indications of IPO timelines are keenly awaited, and then of course you had that deal on Reliance Retail as well. But this stock has been under pressure, so just keep that in mind. And banks have made a bit of a comeback this week. Axis Bank, some of the NBFCs like Bajaj Finance up about 3-4%. So my eyes are going to be on those stocks as well. Defense too could be in focus as the Defense Acquisition Council has approved proposals worth almost 7,800 crores. A couple of them like BEL are in focus, Hindustan Aeronautics, etc. And that has been one pocket that has done very well. So we'll keep watching that too. But at opening, I guess the market is not going to do that well given the kind of global setup that we have.
Well, in the last 10 days or so, Sonia, whenever you bought the dip closer to around that 90,250 odd mark, you've made money. So today's going to be a bit of a test out there because you have the big event later this evening when the Fed Chair speaks. You have the dollar index that's very, very strong overnight, and the global cues as well that are coming in there, they are fairly feeble. So it's going to be a test for the scalpers. We have been saying this is a scalpers market. That's you buy at lower levels and you square up the position once you get a bit of a bounce, if you do get that bounce. So that's going to be the test. The Nifty PCR, that's a technical indicator. That's moved to the lower end of the band. And the third part is maybe some part of this is factored in because yesterday in the second half of trade, we saw a sharp sell-off both on the Nifty as well as the Nifty Bank, and that was expiry related. So we'll have to keep an eye out on how much of that is already in the price as well. Now, just to recap, yesterday, the Nifty went ahead. We broke the 20 DMA, but we couldn't sustain over the 19,550 odd mark. The Nifty Bank, it's facing resistance at higher levels, 44,700, 44,800 odd. We're seeing some bit of resistance out there. We breached that, by the way, yesterday by close to 200 points. But then, in fact, we came back down. The FI positioning, well, it continues to remain net short. Yesterday, there was a marginal move of close to around 5,000 contracts. They unwound some longs and they added some short positionings. The net short position, though, remains at close to around 56% odd. The PCR, the point that I was making, it was at around 1.1 odd. That's cooled to around 0.78. Now, technically, we have seen that when that PCR breaches the 0.7 odd mark, that's from where you get a bit of a bounce. If we're looking at a technical indicator, that could be one of them. Now, two strikes were very, very active in yesterday's trading session. 19,500 call on the upside, 19,400 put on the downside. Now, the 19,400 put, that's quite interesting because the premium's around 100 rupees odd. Given that we're likely to start off on the back foot, I'll be watching that whether or not there is some unwinding of those positions because there was some writing being seen out there. And going by the GIFT Nifty opening, that's likely to be breached on an opening basis. The levels then come up for you on the screen. The 20 DMA, that's the line in the sand. The bulls, well, they would like to get past that. The bears are coming in to defend out there. But the recent low, 19,250, I think that would be a crucial zone that the bulls would like to defend. Moving to the Nifty Bank, Well, the 20 DMA again, that's a bit of a problem point out there. But on the downside, that 43,900, 44,000 odd, crucial support zone out there. So the GIFT Nifty suggesting we pull back 100 points odd. It's going to be a test for the bulls today. Risk reward normally has favored buying in that vicinity of around 19,250 to 19,300. But if in case it works and you get a bounce, I think you should square off your position and not carry it into the weekend.
Okay, well, yes, it's the weekend as well, so you got to take that into consideration. But all eyes on the market opening today, expected to be a soft one. We have plenty of market opinion coming in for you, so let's kickstart very quickly. This Friday morning on the equities front, we have Ray Dalio of Bridgewater Associates, who says that India's successful lunar mission landing its Chandrayaan-3 spacecraft on the moon is another one of the many straws in the wind showing its ascendance. He says, as previously shown in his health index for countries, which is used to derive his projections for countries, the next 10-year growth rates, India scores on top with a projected growth rate over the next 10 years of around 7%. He says India has the right mix of ingredients that shows that it has great potential and the right leadership to catalyze it.
Okay, well, let's get you some money market views. We have Lakshman V of Federal Bank, who says that the rupee took a breather against the US dollar, touching a 3-week high as the US 10-year yield cooled from a 15-year high of 4.36%. He says the market will take further cues from Fed Chair Jerome Powell's speech at Jackson Hole later today. He expects the rupee to be in a range of between 82.36 to 83.15 to a dollar for the next few trading sessions.
All right, and on the bonds, Lakshmanan says the 10-year benchmark bond yield cooled off to 7.2% from its 4-month high of 7.25%. Tracking U.S. Treasuries, he says concerns around inflation still persist on the back of uneven monsoon and El Nino conditions. He expects the 10-year bond yield to trade in a range of 7.15 to 7.25% in the next few trading sessions.